Hi, good evening, everyone. Welcome to our section tonight. Okay, my name is Elky, and I'm gonna be your speaker for tonight. Okay, yep. So tonight, what we're gonna talk about is we're gonna talk about the hard truth about trading here. All right. Okay. So welcome to our section tonight. Thank you very much for joining our section today. Okay. So before I starts our section today, our section today is will be all about the hard truth about trading and some of the things that many people they don't tell. Many who are inside these markets, they never tell you, but they only been highlighting how much money you can get, how much profits that you're able to earn, what are the stocks you have been missing out, trading opportunities you've been missing out. But lack of all this hard truth, all this think that you should be aware before you coming into this battlefield. All right. Okay. So my name is Elky today. Okay. So I believe many of you guys right here today is because you're really interested to come into this trading field, into this battleground. Okay. And making all this money that you've been seeing all these traders, all these your friends, your families, they have been making. It's like so easy. It's like just within their fingertips, they able to make so much money from the markets. Yeah. Then it would attract you that and start trigger you to start thinking, can I be one of them as well? Okay. Yeah. Of course you can be one of them. Okay. But before you start, there are several things that I would say, or for you, any of you guys that have been trading and that have been gone through some of the hiccups, all this. Today, our section will be sharing with you some of the facts and some of the highlight some aspects that hopefully will able to help you to see the things more clearly and also understand why some of these things are happening. For those who hasn't been started to do but you are interested, these are some of the things that you might really want to plan it accordingly before you start your first trades. All right. Okay. So our tonight section is not about strategy. It's not gonna be about indicators. Okay. If you are interested in strategy, if you're interested in indicators, you can join for our other webinars. Okay. Or you can always play back some of our market talks, some of our traders sharing sections and candlesticks webinars, all these our past webinars that has been talking about strategy, has been talking about indicators. Okay, but tonight there's nothing about all this tonight. It's about the real battlefield that we are talking about. It's about your mind. Okay, the mindset of a trader. Okay, and hopefully throughout this section today, it will help you guys to not to lose any of your profits back unnecessary. Okay. All right. Okay. So good evening, everyone. This is your speaker for tonight. Okay. For the next 45 to 60 minutes, I will be the one that I'm gonna share with you guys some of all these traps, these psychological traps that could happen to any one of us when we are engaging with the markets. Okay. And my name is Elky. Okay, I have been in this industry for more than 10 plus years, and I started as a futures dealer, and I was company prop traders once. Okay, 10 plus years ago. Okay, and I have been technical trainer since 2016. Okay, yeah. So right now I'm currently engaged, attached with Berjaya Securities. We used to be known as Inter-Pacific Securities. Okay, or if any of the youngster that have been coming through us, our online branding, which is Pac Online as well. Okay, so we have been around since 1972 to help our clients to do better in their stock investments. Okay, yeah, we are broker licensed with SC. Okay, and also we are part of Berjaya Corporations. Okay, yeah. So tonight, okay, we're gonna go in through some of this hard truth that many they skip or they aren't aware before they start dealing in this business. Yeah. So what we are talking about is trading, this trading business. Okay. So you guys right over here, you guys can take a guess how many percent of traders in these markets globally, okay, globally, who are making money. Okay, just try to guess. Uh, do you think that 50% of them they are making money, or you think 70% or 20% or 10%? Okay, the truth is there is only less than 2% of the traders throughout the whole world they are making good money. Good money as in really a lot, uh, um, over millions kind of money, kind of profits, and about like 10 to 15%, actually it's less than 10% that making average profits that good for them to spend, to go through quite a good life, average profits. Okay, but more than 80% of them are consistently losing money. Okay, when I say they are losing money, it's not that every single trade they are losing. The trickiest part about trading right over here is sometimes you make, sometimes you lose. Okay, so when they could be times that you have been making for a period of time and you think you really got it, but eventually some hiccups happens. Sometimes you will blame it to luck. Sometimes you're gonna say, oh, okay, it's the market's problem. But in the long run, you are not you. We are losing money for those that who are still inside this 80%. Okay, for those who are in this 80%, net, and in the long run, they are losing money. They can be making for a short period of time, but eventually they're gonna lose back, and eventually they're gonna be in a losing money state. And why is it so? Is it because they do not know the indicator? Is it because they do not have insider tips? Is it because they are not experienced enough? None of this. None of this reason actually. Okay, for the traders that inside this 80%, they could be people from our field. Okay, they can be a dealer, they can be broker trading for themselves. They have all these tips, all these Changi equipment tools. They could be still losing money. They could be professionals. They could be retailer tradings like me and you. Okay, they could be pro traders with a set of strategies. They could be seasoned traders that have been trading for a long time, but they could still lose money if they do not do well on some of this aspect. So some of this aspect that causing them to lose money consistently, it includes emotional pitfalls. When they couldn't control the emotions, couldn't control their emotions, control their decision making, they will have all this issue. And not only emotions, but also some habits that they build up. Okay, some mental blocks, and also many other psychological traps. Okay, so today we gonna cover some of this. Okay, and at the end of the section, I'm gonna share with you some of the steps, some of the methods that I start employing to help me to escape from being this 80% to go into the 20%, to go to the another side. Okay, yep. So in this section, I'm gonna share with you some of my personal experience. I'm gonna share with you some of the truth about trading. Okay, so if you have any questions, do feel free to type it into the chat box. Okay, if you are looking or watching through Facebook, then you might not see the chat box. But if you are looking through YouTube, yes, on your right hand side, you should have a chat box, and you can feel free to put it there. Okay, so any questions, I'll try my best to attend to you. All right, at the end of the sections. Okay, yep. Okay, so if any of you today you are in the 80% group, okay, don't be sad, okay, because we human beings are designed to fail at trading. Like what my mentor always says, traders is not a normal people job. It's an animal job. Okay, because to be a successful traders, to be a very profitable traders, what we need to do is really one of kinds. What we do, how we think, what we do, how we think, all this thing. We cannot be like an ordinary people, like normal people. Okay, because normal people, our brain are designed for survival. It's not for financial markets. Okay, like some of this problem that normal traders that never been trained, they will have is like need of certainty. Okay, they will always wanted to wait until like really confirm that this company is making good result, then only they go in. Okay, they are not judging for the probability, for the chances that the likelihood of the event, and then they just go in ahead of the markets. So many times, when if any of you have experienced before, when you really wait until the confirmation of the signals, let it be the company announcement, let it be the technical signals, let it be the annual reports or the quarterly earnings. Okay, when you are in, usually that's almost about the high. Okay, because for traders, okay, for traders who do their analysis, who making making guesses based on their analytical data, okay, they would be in early, in anticipation of the results, in anticipation of the earnings announcements, okay, way before the result being announced. Okay, so that's how they train themselves to not to wait for the certainty. Okay, that's part of the traders traits that's been trained. Okay, another example, fight or flight, meaning, okay, when the markets, okay, when there is a news happening, okay, for example, like Genting. Okay, let's talk about Genting. Genting announced a sudden um, takeover. Okay, so some of them they might freeze. They have been buying Genting. They haven't been expecting that they will be takeover for Genting. Many of them they might have a brain freeze. Okay, when the stocks open for listing, when they look at it, they will like, oh shit, what should I be doing? Okay, they will be brain freeze. They don't know what to do. They don't know whether they should fight or they should fight, which means getting out. Okay, there will be a moment whereby there will be mind freeze, and that split seconds actually differentiates the traders and retail investor or in retail traders. Okay, because the pro, for that split seconds, they would be able to condition themselves fast enough to make a decision either to cut all everything, just take the losses, or they're just gonna add in buying more and get for a rebound in the markets. All this, okay, a strategy. They were able to execute that strategy in that split seconds. That's also what we have been trained. Okay, I remember the fastest trades for the past 10 years, 10 plus years when I have been trading, the fastest trades that I ever experienced is the second when I key in to buy key in the order, on that next second, milliseconds, okay, my order has already matched and got out. Okay, so that's how fast we have been trained to think, to react, and to survive in these financial markets. Okay, yeah, but unfortunately, many humans, our human brain, they are designed to survive in the real world and not in the financial world. Okay, yeah. So it that led us to a lot of all this issue that we have, like FOMO, like waiting for confirmations, like overconfidence, all this, many of all these traits, okay, that we experience. Okay, not you, not me. It's almost every traders. Just that, like for example, from time to time, I will still encounter some of these issues, some of these traps that I'm going to share with you guys. But the difference is I make myself aware that there are all these issues that could happen. And when I am aware that I'm having this, the best the greatest thing is when I have this awareness, I will be able to make cautious actions to stop myself, um, to employ my methods how to stop it, and face it accordingly. Okay, so that the problem doesn't prolong, doesn't drag, and led to a bigger losses. Okay, that's also the reason why I'm having this section with you guys today, hopefully to make awareness of all these problems and help all the traders outside, especially the new traders, to really understand themselves and also able to escape from all these issues. Okay, yeah. So trading is really different, like what I've been mentioning. Okay, why is this so different? Is it's very different from what we have been taught, what from our how we've been brought up. Is because since young we are being taught that as long we put in a lot enough work, as long we learn enough, as long we practice enough, then we will be able to success. Okay, like in work, as long we put in enough time, as long we put in effort to socializing, to do our job, all this thing, and learn or make progress in our learning, all this, then very good chances that we're gonna get promoted, that we're gonna go on the corporate ranking, or if I'm spending enough time to meet enough people on sales, by my sales number will get up, because by the law of average, if my success rate is like 20%, if I met 10 people, maybe I only get 2 sales. But if I meet 100 people, 1,000 people, then my number of success, it will going up accordingly. Okay, but trading is different. If you do not master, or you do not aware of some of this problem that has been haunting you, no matter how knowledgeable you are, no matter how much time, how much effort that you put in, it doesn't guarantee success. That's the scariest part about trading. And like I said, you could be making sometimes, but eventually you might lose it back. Okay, and that could take years to happen. Okay, yeah. So all this thing that I've been sharing is just, you might not gonna experience it all of them once, like in near term, but it might come in at a specific moment sometime later. Okay, and hopefully with some of this that I'm sharing today, when you have that moment, okay, it will able to like light up like a light bulb, and then tell, oh, okay, I'm having this issue, and this is something that I should look into some, how this is how I should encounter. Okay, yeah. So yep. So let's start with what are all these traps that we have been talking about. Okay, yeah. So some of names I've been putting up just now. So we're gonna go through some of these, like FOMO, okay, revenge trading, loss aversions, overconfidence, and also bias. There are more in the markets, but today I'm gonna share these 5, which I think that most traders they will be facing. Okay, let's start with the very first one, FOMO. So what is really FOMO? FOMO is actually stands for fear of missing out. Okay, so if you have ever talked to yourself like, wow, I cannot miss these stocks. This stock's gonna be the best stocks. This stock's gonna be the stocks that gonna make me 100% returns, 200% returns, and this stock's gonna be the stocks that I must have. Okay, so if you ever talk to yourself like in this way, or any of your friends talk to you in this way, then they might be creating FOMO for you. Okay, yeah. So or you have been looking at these stocks like, wow, every day it's just keep on going up and going up, and then you just trying to get onto these stocks, no matter what price it is. Okay, so all these are the signals or the signs of you are fear of missing out this opportunity. Okay, yeah, but in fact, this FOMO is one of the main reasons, the main culprits why a lot of traders they got in a bad positions. Okay, yeah, this FOMO could be where the share price drop like crazy. Okay, maybe from 1 ringgit drop all the way down to, not 1 ringgit. Okay, 1 ringgit, the max it can drop is 30 cents. Okay, for example, like 2 ringgit shares, it suddenly dropped 50%. Not 50%, drop 50 cents. That's about 25%, and it's a good stocks. And then you will be thinking, so finally this stocks at a certain ship price. It's time to go in and get it. Okay, yeah, and eventually when you got into a bad position, many other problems it will come. Okay, which I'm gonna share later. Okay, so when you're facing this FOMO issue, some of the things that you will be doing is you're chasing move. You believe that either you believe that the stocks can continue to trade higher, or you might be thinking that, okay, this is the lowest already. Okay, it's a price that you must get it. Okay, and many times all these trades they are entered at the worst possible time ever. Okay, especially those that you are chasing high. Okay, yeah, in some of the Chinese trader, they will always say that 住套房, okay, staying in condominium. Okay, because condominium is very high. So when they really chase, they fear of missing out the stocks. They're chasing at a high price and they got stuck. For them, it's like staying in the high-rise condo. Okay, whereby the share price can from 1 ringgit, from 1 ringgit drop to 20 cents. They are still holding the share at 1 ringgit price level. Okay, and many times this happen when the stock is having very good sentiment, good momentum. Everyone is so happy about it, and they are so greedy, they are so excited about it. Okay, there are people talking about these stocks guaranteed no problem one. It can go to 5 ringgit, 10 ringgit, 30 ringgit, 50 ringgit. Okay, yeah, so whenever you see all these signs, then you know that it's gonna create the FOMO. Okay, and what you need to do is just keep calm and really ask yourself, is it reasonable? Okay, so one of the example right over here is this new stock IAB. Okay, this new stock IAB, you can see that the share price it was at 70 cents one time. Okay, so we can see that this on this charts at this point it's at 75 cents, and just within days, okay, just within days, the share price from 75 cents it went all the way to 1 ringgit. Okay, maybe at 75 cents you might be hearing your friends say, hey, would you want to trade these stocks, buy these stocks? Okay, IAB, you can see it's gonna go up to target price 1 ringgit. Okay, that was on 7th November. Okay, 75 cents. First you might be saying, hey, true or not, later cannot go how. Okay, and then you are looking at it go to 80 cents. Okay, going to 95 cents. Okay, maybe somewhere around like 90 cents you jump in, bought it. Okay, and then it went to 1 ringgit or somewhere near 1 ringgit. Sometimes trader very smart one. Okay, people say target price 1 ringgit, 98 cents I get out. Okay, I don't want to wait for 1 ringgit. Okay, 98 cents you get out. Okay, yeah, you make a good profits of 8 cents out of a 90 cent stocks. That's almost a 10%. A very good trade. Okay, Then your friends start to come in again. They say, hey, this IAB is Saror related ones. The share price cannot be 1 ringgit only. It will go to 2 ringgit. Okay. So your friend has mentioned to you that it can go to 1 ringgit. And yes, it did went to 1 ringgit. It did go to 1 ringgit. Okay. And you profitable before. Okay. So this time, ini kali lah hantam kau. Okay. Since it's at 1 ringgit already, and the momentum continue go to 104, 110, you just chase in and buy. Okay, aiming for 2 ringgit. This time you don't want 2 ringgit also. Just when it comes to 1 ringgit 80 cents or 1 ringgit 90 cents, it's good enough to chow. Okay, and using the profits that you got from the 10% profits, maybe you might even double it up. Okay, because this Saror related memang cun, memang okay. Your friends tips there put okay, just buy. Okay, cannot miss this. Okay, that could be what happens to someone. Okay, without thinking that these stocks have been moving from 75 cents, okay, or even 70 cents, all the way to 1 ringgit 12 cents within like less than 2 weeks. Okay, from 70 cents to 1 ringgit 10 cents. Okay, let's just take it 1 ringgit 10 cents. That's a good 57% growth in a stock price. Okay, that's the earnings, that's how much the earnings or this thing can grow. Okay, yeah, so you have to ask yourself, is there any really solid reason backing the valuations behind of this 2 ringgit? Okay, so what might happen is when that trader is happily buying into the stocks at 1 ringgit 08, 1 ringgit 10 cents. Okay, that could be the 2 ringgit, could be the news, could be the price that the smart money they are putting out, so that they're able to distribute, they're able to get out. Okay, so you can see within 4 days, the share price dropped all the way from 1 ringgit 12 cents all the way to 84 cents. Okay, 1 ringgit 12 cents to 84 cents. That's a good 24.5% drop within 4 days. Okay, yeah. So for those who chase in high, buy on FOMO, okay, then they might have to stuck in these stocks for some time. Okay, or some of them they might already cut loss. Okay, yeah. But for whoever that's inside it, I'm not saying that the share price couldn't go to 2 ringgit, but it might take some time. Okay, to really build up the earnings, to really build the catalyst for it. Okay, then you might ask me, hey, Elky, like you say like this, then does it mean that every single share price when it moves behind of it, they have catalysts, they have earnings supporting it? I would say that you're right. Not every single price movement is supported by all these fundamentals, data, all these earnings. Okay, yeah, there could be smart money supporting it. There could be a hidden hand behind pushing it. Okay, we do not know. Okay, but if they are the one who are in control of all the share price, do we want to get in at such high price, whereby when these stocks already move up more than 50% in such a short time, whereby all this smart money that have been lifting up the share price for more than 50% already, which they can easily take profits, would that be a good timing for us to go in and buy? Okay, then this we have to ask ourselves. No doubt these stocks, the fundamental, all this thing, it could be great, but is that 1 ringgit 10 cents, is this timing, is the good timing for us to go in? This is what we need to ask ourselves. Okay, but if you're going in at during that timing with the plan of being stuck, you say, oh, I don't mind, I just put in to be stuck for a year, 2 years. I believe in the long-term view of these stocks, and I'm gonna collect it whenever it goes lower. Then I got no issue with it. Okay, you're having a plan, you are executing or following your plans. You have a long-term investment plan for this. That's totally fine. There's nothing wrong with that. Okay, yeah. Okay, but if you are just chasing high, thinking that this is the stocks that you cannot miss out, the target price of 2 ringgit right over there, you must buy without considering that the share price has moved so much, without considering that the share price, it might come down. The time that for it to go 2 ringgit, it might be longer. Then yes, you might really want to rethink about it. Okay, how you approach this. Okay, so if you guys have experienced all this, so what you have experienced is the traits called FOMO, fear of missing out. Okay, then the next one, also another classic one, which is revenge trading. Revenge trading. This is the one that really why many traders that have been blowing up accounts, let it be in stocks market, let it be in FX futures, whatever. Okay, revenge trading is usually the reason why their accounts go blow up. Okay, why people losing big chunks of money in trading. Okay, yeah, because when we look at revenge trading, many times is the traders is trading against the market. Okay, for example, like the very first line, this stock dropped so much already, it cannot go lower anymore. Okay, that's totally against the markets, against the market trend. The trend is going down. The share price could be going lower due to some of the external factors, some of the fundamental reasoning. Okay, and as long the environment, the thing never change, anytime going in is just against the markets. Okay, yeah. So all this we call revenge trading, and the worst is some of them they might since right now is so cheap already, I buy more to average down. So, okay, yeah, I buy more, I double up here. Okay, or even some they got stuck, they are not planning to hold it for long term. They buy even more so that they average down their price, and whenever there's any rebounds, they're able to sell and sell. Okay, yeah. So that's all this actions right over here is actually telling us that the traders is revenge trading, because at that moment, at that state of mind, it's no longer about it's a good stock or not. It's not no longer about whether it's his trading plan or not. It's all about P&L. It's all about profit and losses. And many times at this stage, the only thing that come into the trader's mind is, I cannot lose this. I need to make back this money. They cannot accept the losses. They just wanted to make back the money so much, whereby they can do anything for it. Okay, yeah, they can do anything for it, and that is the so-called the survival instinct that we have as a humans, trying to recover, trying to make back, trying to survive. And that actually the reason why caused us to make wrong decisions. Okay, that's why I say traders is not a normal human job. Okay, because at that moment, as a professional traders, as good traders, at that time, what we need to do is actually we need to acknowledge the loss, accept the loss, cut it, and then just accept it, and we start over again. Okay, but many, they couldn't accept it. For them, is their hard-earned money, or even worse, they cannot accept that they being wrong. It could be ego play right over there. Okay, Yeah, and during all this moment, when they couldn't accept the loss, when they couldn't accept they being wrong, anger and emotions are the one that driving all this decision making. It's no longer about their plan. It's no longer about the market. It's no longer about the stocks itself. It's about whether they are losing or not. Yeah, it sounds very funny, but that is actually what's happening to almost every traders. Okay, especially for new traders. Okay, when you are having your first loss, when you are making a significant, a significant sizable amount of trading. Okay, and unfortunately you got into a bad trade. Uh, this all these things it might come and haunt us down. Okay, unfortunately, in trading, in the business of trading, there's never 100% winning rates. Okay, no matter how good you are, there's never a day that you can just win. You're not to say a day lah. There's never gonna be the time that you will win only and you do not lose. There will be losses. There will be bad trades, and that happens. And as a train traders, we accept it and then we move on. Okay, but if you are not moving on, you might go into this so-called revenge trading. Okay, so imagine if you are going into this stocks called this is one of the popular stocks called Hang Yuan. It was previously it was before it changed name. It's called Shao. Yeah, they are doing the called they are in oil and gas. They're in oil and gas definitely. Okay, they are doing refining. Okay, so the chart that I'm sharing right here is a weekly chart. Okay, so you can see this is adjusted weekly chart. The highest that it got is 19 ringgit. Okay, this is one of the hottest stocks in 2017. 2017. Okay, because the share price went all the way from 2 ringgit. Within a year, it went all the way to 19 ringgit, almost 10 times higher within a year. Okay, yeah. So imagine from a stock for a 19 ringgit stocks, it dropped to 10 ringgit. It dropped half. Okay, in every candle is 1 week, in almost a week. How would you think? Would you be thinking that wow, cheap already, or if you're buying, if you unfortunately you're buying at the high, would you think that it's a good time to average down instead of taking the losses? Because if you're buying at 19 ringgit and it drops to 10 ringgit, you are losing half, losing 50%. Would you be thinking that it's too much to lose, that you must average down? Okay, so imagine if you are averaging down, okay, at that time. This is what happened next after that. Okay, I have to change it to monthly chart. Okay, to show you the whole picture, because from 2017 until right now is like 8 years apart. Okay, so from throughout all these 8 years, it never gone up to the high. But in fact, the share price continued to go down and down and down, and up to today, it's only at 75 cents. Okay, not even 1 ringgit. Okay, not even 1 ringgit. Okay, the highest it rebounded is somewhere around 5 to 6. Okay, so even if you're really buying at, if you average down at 11 or 12 or 10, okay, if you're buying at 10, your new average investment that you use to average that money, you are only able to recover half of them when it rebounded to a highest for the past 5 years. Okay, and based on today, you're losing more than 90%. Okay, that could happen if we do not acknowledge that we have made a bad trades, we accept it, and then we move on. Okay, but if we continue to average down and just hold through it, okay, this could happen. Okay, yeah. So that brought us to the next one, which is loss aversions. Okay, so many times when we are not accepting the losses, we make a bad trades um, is we do not accept, we do not want to admit that we are wrong. Okay, so you can see all these emotional problems, all these traps, so-called psychological traps, they link. Okay, they link. Okay, uh, so many times all these small losses that if you acknowledge it earlier, the earlier that you acknowledge, the smaller the losses it can be. Okay, but when you just drag it through, when you just let it grow, it can sometimes it can really become a massive drawdown. Okay, yeah, okay, yeah. So like another example, like Top Glove. This is just happened 5 years ago. Okay, when the high it was at like 10 ringgits, and today you're losing more than 93.86%. Okay, if you really bought at the high. Okay, and believe or not, I'm not excusable from this. Okay, there was one time that I was it and I cut most of it already, but at a very painful price. Okay, so I keep a very small portion to remind myself that how bad that could be. Okay, and for that single lot that I'm still holding as of today, is still down almost 50% from where I got it. Okay, from where I got it, and you can see my price is at the cost is at 1 ringgit something. Yet I still lose almost 50%. Imagine if you are buying at much higher price, or even worse, you are not admitting that you are getting in at a bad timing. You keep on averaging down, and that's how much the losses that it can grow. Okay, yeah. So that all those will be the part whereby getting into a wrong trades, having wrong trades, I'm willing to cut loss, all this. Okay, uh, so that will be at the what if you are making wrong decisions. But how about when you are doing well? Okay, so the trap for overconfidence. This is the problem when you are doing well. Okay, so when you're not doing good, when you're having losses, you're making bad trades, you have problems, and when you're doing good, you have problems as well. So that's how dangerous. Yeah, I shouldn't use the words dangerous, but that's how tricky trading is. Okay, no matter you're doing well or you're not doing well, they are trapped everywhere. Okay, so anytime when we are trading, when we are in dealing with this business, we really have to do it with a very highly cautious mind. Okay, so when you're doing well, you might have the issue overconfidence. Okay, yeah. So when that happens, okay, that's actually causing the winner to lose back his profits. Especially many times they might be losing unnecessary. Okay, because once you are making profits, like nobody issue. Okay, I had a few painful lessons from this overconfidence trap, whereby I still remember there were time whereby out of 2 weeks for every single trades. Okay, I'm intraday traders. I trade many things. I also train traders on futures, on FX, on stocks, all this. So we trade everything. But throughout that I still remember it was 2 weeks. Throughout that 2 weeks, every single trade that I made, regardless is FX, regardless is commodities, regardless is stocks or what, every single of them make profits. So you can imagine the hit rate, it was 100%. I was so happy with all these profits. I even talked to my friends. Wow, so easy. I feel that I'm on the way to be the greatest trader ever. Okay, and that was the time before I got my darkest moments, whereby for the next 6 months I've been losing my pants. I have been losing all the confidence. I have been I almost quit. Yeah, because I just feel hopeless during that time when I'm turning from that 2 weeks that have been making every single trades, calling it right, doing it right, to every single trades, no matter how I do, how I struggle, all of them, they are just losses. Repeating hit. Okay, yeah, and the reason why is because when we got overconfident, we become slack. We feel that we can cut corner, and we think that we are reading the market so correctly. So never mind, I just get in earlier lah. Or never mind, it will be profitable. I just buy higher lah. There will be a lot of never mind. Okay lah. All this we become slack. We become reckless in our executions, and even worse is we are increasing our position size. Or same thing, revenge trading come in because I cannot accept that I'm losing. Since I so overconfident with myself, I having this ego, I couldn't accept that I'm losing. Then I double up on next trade, trying to make it back, or lose. Then double up again. Okay, trying to make back in that one trade because I think that I have the skill to do it, and eventually I can really make a very big hole if I continue and double up. Okay, yeah. So overconfidence, that creates problem as well, and from overconfidence, it will lead to losing the disciplines, losing the routines, losing the habits, and eventually got into all these problems, all these traps that a trader face when they are doing all these bad trades, bad movements, which that I shared just now. Okay, yeah. So the last but not least is bias, confirmation bias. Okay, yeah. So it happens when a trader is holding a position, or he's so putting his ego up and unwilling to read, follow to the markets. Okay, so many times, all these decision makings is driven by emotions. Okay, and they just unwilling to exit. They are just focusing. Oh, okay, these stocks have good news. The bad news, just ignore. It will come back. All this. All right. Okay, so by having that, eventually loss aversions also come in, and then unwilling to cut all this. So you can see all these traps, all these things. It actually they are interconnected. Okay, and that actually builds into a trader cycle. Why 80% of the traders they are losing money? Okay, because at the very starting, they could be very disciplined. They start right here because if you are new into a market, you might research, or you have to be disciplined. You have to have a method. You have to consistently trading on the methods, and you could do all this. Okay, when you just started, but eventually when you got overconfident, you try to cut corner, you try to get early execution so that you can make more profits, or you are being reckless in your trading, and eventually you start losing. Then you couldn't accept it, whether monetary or the ego. Then you're having a lot revenge trading, and when you're having revenge trading, the losses it build up, and then that comes a moment whereby you do not want to accept the loss, because if you never cut, it's not really a loss, right? It's just a floating. It has a chance to come back, but that actually lead to loss aversions. And eventually when it's really big enough, either you don't look at it anymore, or you really cut it, and then you lose confidence, you lose hope, everything, and that eventually lead to more hesitations and also FOMO in your trading, trying to make the so-called the best trade so that you can make back all your profits in another trade. Okay, yeah. And eventually, when you really realize that you have been doing all wrong, and then you try to be more careful again, be more disciplined again, then you start from the stage one again. Okay, so basically, this is the cycle that every traders they will go through it, and the difference between normal traders and professional traders or a successful, profitable traders is the profitable traders, they will try to prolong their stage one, the discipline, the selective trading cycle as long as possible and shorten all other cycles. Okay, by understanding what they are going through, understanding themselves. Okay, yeah. So I do experience that before, like these trader cycles. I still have it from time to time. Okay, yeah. No one will be able to excuse from it. Okay, but it's just really depends on how you condition yourself. Okay, so for the past many years, I've during that time I was not profitable. Even my hit rate, like I said, you can see there were time that I can hit 100% for 2 weeks, or there were time that almost a month is almost 90% winning rates. Yeah, but during that month, that period, of course, I'm profitable. Okay, but after that, when it moved into overconfident audit cycle, then eventually throughout the whole journey, that it will become not profitable. Okay, yeah. So despite that, having all these win rates, all these strategies, all this spending all this time with the markets, the result, it wasn't profitable until I start to do practice some of this methods, some of these actions. Okay, then only things change. Then only the whole thing become more profitable. Okay, at least it helped me not to lose some of this money unnecessary. Some of this lose back all this, throw back all this money, and also help me to shorten the cycle, the phase whereby having all these traps, all these stages. Okay, yeah. So today I'm gonna share with you guys some of these methods. Okay, so if you think that is useful, okay, is useful, you might want to practice it at your end as well. Okay, the very first one that I think is really useful is journaling your trades. Okay, not only just the P&L, but try to put in how you enter the markets, any emotions that you have, and also the exits. So you don't want to do it once a month kind of thing, not like a monthly accounting. Okay, but do it daily, every single day. Okay, if you do not have any trades, just open it up and look at the markets. Try to get update with your portfolio, update your portfolio to see the floating P&L. Okay, any of this. Okay, so that it can help you to be more focused, to be get update with what's happening to the market, what's happening to your portfolio. And by doing all this, it really can help you to visualize any of your hidden habits, such as, for example, that this stock A that you're holding, you know that the share price has been dropping, but you are willing to cut it. Okay, so at the end of the day, you're seeing that, you already know this stock's very good chances it's gonna drop because it's going on downtrend. The losses from 10%, right now it grew up to 25%. Then when you're updating the portfolio, you might really want to ask yourself, hey, why am I not doing anything on these stocks when you're updating your portfolio? Okay, is it that I'm willing to accept the losses? Is it I'm in this loss aversions kind of phase? Okay, then from there you are making yourself aware that you're having this issue, and then only you might able to take action against it. Okay, imagine that you never update, you never even want to look at it. How are you gonna change or even take any actions against it? The only thing that you can do is the four-letter word lah. Hope that it will come back. Just close eye, don't look at it. Hope that it will just recover. Okay, not putting in any active effort to change, to so-called to rescue the portfolio or to do better. Okay, so this is an example how you could journal, put up a journal. Okay, just a very simple one will do. Okay, just put remarks, whether is there any issues, all this. Okay, just do a very simple one. You don't want to complicate it so that you can repeat it to do it every single day. Okay, but the gist right over here is do it every single day. Okay, so that you're making aware of what you are going through, what's happening to your portfolio. Okay, yeah. So besides journaling, okay, besides journaling, I do aware that walking away is very important. Okay, in trading, the important thing is not just about keying buy and sell. To decide when not to buy and when not to sell is very important as well. Okay, many times we are losing. It's because we are buying, we are executing trades at the worst possible time. Okay, at the wrong time, when we are having emotions, when we are not thinking clearly, or when we are having this FOMO moments. Okay, those are times that we are throwing the money. Okay, so if one able to walk away from the markets, okay, that would be save the trader a lot of money. Okay, so you need to tell yourself when is the time that you need to walk away. Okay, is it that when you're missing out one trade, two trades, that's the time that you need to walk away? Otherwise, when you are sitting there staring at the screen, the longer that you stare, the more that you feel that you must do something. Okay, then at the end you might be buying much higher, or you might be chasing some other counters that maybe just a flip without any trading plans. Okay, yeah, and by doing so, avoiding doing all this so-called like stupid trades is really save a lot of money than the more money that you are making from a trade itself. Okay, or if you are, you know that you are those kind of revenge persons, okay, then you might really want to set a daily stop loss, whereby if you hit a certain amount for a day, then you might want to really accept it and then just move on, stop for the day. You don't want to do some of the thing like me previously doing. I just keep on double up trying to make it back, like the martingale style. 1 ringgit lose, then my 2 ringgit, 2 ringgit lose, then my 4 ringgit, 4 ringgit lose, 8 ringgit, until all the way until I make back the money. Okay, but in the market it's different. I buy 10,000, lose 20,000, 20,000, then 40,000, 40,000 is 80,000, then 160,000. How much limit or how much money that you have to double it up? Okay, and really, if we are not trading with a correct mind state, we can really every single trade let it we are doing it correctly, we can also lose the trade. Okay, yeah. Last but not least is always set an exit plan. Before you go in, always have an exit plan. Always ask yourself what is the worst case scenario, what is the plan to exit, how much that you're willing to lose. Okay, by doing so, you have an idea how much that you're willing to lose. It's easier to get out. Okay, and it's easier to prevent a loss aversion scenario from happening. Okay, yeah, because if you plan it, you are prepared for it. When it happens, yes, it's still painful. Okay, but at least it's you are prepared for it, and then what you need to do is just force yourself to click the button and accept the loss. Okay, yeah. Otherwise, if the losses, there will be time that the losses it can turn back become profits. Okay, but many times it will continue to grow because the trend it could go on the strong trends. Okay, especially those company, those stocks that turn sour. Okay, yeah. So imagine that if you are losing 50%, okay, it really takes the stocks to gain 100% just to recover that 50% of losses. Okay, yeah. So you really want to always set an exit plan, and trying to set a rules for a stop loss rules for yourself. how to set how much losses you would want to accept, and then what kind of risk and rewards you want. If the risk and reward is bad, you might want to avoid it. Okay, and from that you will able to compute the maximum units that you can trade and control your losses within the total amount that you are trading. Okay, so by doing so, it can help you to have a better idea of your risk management. Okay, yeah. So there comes the very last part already. Okay, so when it comes to the very last part, I really hope that you might want to take a minute to ask yourself, just be frank to yourself and ask yourself, do you know whether is yourself are profiting consistently? Okay, is if yes, congratulations, you're making the profits, you are on the right path. Okay, hopefully just try to remember what you have been doing, maintain the habits, maintain all this good discipline that you are doing it and leading you to a consistent profit. Okay, yeah. So when you experience some of these issues, some of these psychological traps that mentioned just now, I hope throughout today's session it can help you to be more cautious, more carefully handle, and also cutting the stage shorter so that you can go back to this discipline mode that you're having right now. Okay, yeah. But if you are not profiting consistently, okay, or you don't even know whether you're profiting or not, if you just feel like, oh, agak-agak, sometimes I win, sometimes I lose low. Okay, if you do not know, okay, then how are you gonna be profitable? Okay, or if you are not profiting consistently from this business, then you might really want to ask yourself, what will you do to change it? Do you know why you are not profiting? In what aspect that you have been losing it back? Okay, I believe there will definitely be times that you are making, there are times that you're losing. Okay, so do you know why you lose? Okay, or even do you know why you make? Okay, because if you do not know why you make, then how you can replicate it and make it consistently? Okay, so hopefully by some of these methods that I share, some of these ways, it can help you to really answer to some of these questions and help you to get into the phase whereby you're able to get profit from the market consistently. Okay, yeah. So in summary, this in this trading, in trading, okay, we definitely need 3 M's to be successful. One, the first M is methods. The second M is money management, and the third one is the mindset, the correct mindset. Okay, yeah. So when you're just starting into this business strategy, the method, it could be really important for you. But when you spend long enough, when you already have know some of these strategies, all these things, mindset is actually the one that playing the key to how far you can go and how long you can survive in this business. Okay, and that's the very first thing that the key thing for us to look at it, so that we can achieve a consistent income. Okay, yeah. So last is we really cannot control how the market it behave, but we can't control the one behind all these decisions, all these trades. Okay, yep. So thank you very much for joining our section today. Okay, so if you like our sections, or if you want to know more about our sections, about our company, okay, you can always feel free to contact us through our WhatsApp, or you can scan this QR code to get updated with our next events. And also we have been posting some of the information about the markets, like the fund flow, like the IPO details, market news, all these things at our Facebook page as well. You just need to scan and you'll be able to follow. Okay, so let's look at if there's any questions. Okay, so from Russia, okay, So Gracia is asking, do you mind to do a case study on power technique? Okay, whether if there's any traders emotion insights. Okay, so if we look into power technique, okay, so let me try to share my screens. Okay, okay, so for power technique. Okay, for power technique. All right, if we look at power technique, okay, so we can see power technique is a new IPO stocks that has been selling down and been going down and down. Okay, yeah. So if you're talking about if there is any all these emotions inside, is it will be more towards I would say that it's not really FOMO and revenge trading. Is more towards loss aversions, because for whoever that got it on IPO or they chase in on the first day of the IPO opening, okay, and the share price sell downs, many of them they might don't want to sell it, because for them it's like, okay, this is a good IPO stocks, the growth stories, all these things are there. I'm just gonna hold it through, okay, and some of them they might even average down, okay, yeah. So usually for IPO stocks, okay, during bad timing lah, okay. This is just personal sharing, okay, not calling for buy or sell, okay. Usually, when it's sell down like this, it's really difficult for normal retail traders to just cut, okay, to just cut. Especially every single day, you just drop 1 cent, 1 cent, 1 cent, okay. So if imagine you are buying at the closing lah, okay, just let it be on the closing. When it drops, after 1, 2, 3, 4, 5, almost 2 weeks, from 33 cents, you see some rebounds, okay, there's some hope, okay. Let's say you at 27.5 cents, you down by around like 3 cents, that's about like 16%, okay. And eventually when it start dropping again, okay, you're thinking that it might able to rebound back to the level, or rebound slightly higher, or back to this 28 cents, you might just want to get out, okay. So all this, you can see there's a lot of hoping really, rather than making active efforts, okay. So right over here, it will be a lot of loss aversions. They unwilling to admit that this IPO that they got in is not really a good IPO. Or it's not to say the company is not good, it's the timing is not the best timing, okay, yeah. But if you have studied the stocks, you have faith in the stocks, their growth stories, all these things, and you think that it will come, actually what you need to do is just wait for the selling to just flattens, okay. So usually many times you can see IPO, it will form into a bottom shape, and then it might come, okay. So for example, like this one that recently it came back, okay, you can see for this IPO stocks, it also rallied at the first few days, and then from 40 something cents it dropped all the way until 21 cents, okay, forming into the bottom. Then only it came all the way back to 48 cents, okay. But the whole period is from November 24th until it come back to the 24 cent is 30th of October. It takes a year long for that to happen, okay. Yeah, so in between this period before the selling down, okay, you can see it tried to make a very small bottom right over here, but fail, and then it continues to sell down. So at this time when it's rebounding, okay, buying up with this small formation, there could be some FOMO over here. People, or even at the first two days, whereby they could be talking about it's gonna hit 50 cents, gonna go to 1 ringgit, all these things, and there will be a lot of FOMO traders going in over here, and then eventually some loss aversions, or even right over here at 38 cents, when it start rebounding, they could be by some double it up, okay, over here at 40 cents, thinking that if I bought at 47 cents, I buy some more at 38 cents, it would bring me my average price at somewhere around 43 and a half, 44 cents, then I could exit easily. Okay, but eventually what happened is the whole selling downs. So throughout the sell down, the downtrend, there could be revenge trading, there could be loss aversions involved. Okay. Yeah, so what you need to ask yourself is, you just need to ask yourself, what is your plan for these stocks, for this power technique? Do you know the fundamental of it? Do you think that what's its value? What's the IPO process about? How have their business been? Okay, is there any prospect for their business? Okay, and are you losing other trading opportunities when you're holding into these stocks? And do you have any plan if the share price continue to go lower? Okay, what is the so-called the intrinsic value for this company? Okay, so all this have you been going through? Okay, it doesn't matter you are having you have been having loss aversions, or you're having FOMO, you're having revenge trading. All these are the emotions that you have. So what you need to do is, you need to pull yourself out. So that's why I said you need to walk away. It's either walk away in one way is cut loss and then walk away and move on to the next trades. But if you want to stay with these stocks, okay, what you need to do is, you need to acknowledge that you are unwilling to cut loss. Okay, you're having this loss aversion problem. You acknowledge it. Okay, then the next thing is, you want to ask yourself, what are you planning to do next? Okay, are you planning to just hold through it, or are you planning to like really study in depth into this company, or you have really studied in depth in this company and then you understand their intrinsic value, understand their business model, and then you really have faith into it? Then the next step that you might want to ask yourself is this a stock that I want to put in more money? Is there any other better chance than this for me to put my money in? If there's none, and this is still the so-called the really good company, okay, you have to be aware that you might have bias, okay, but from a neutral side, what you can do is, you can try to talk to a few friends, try to share with them what you think about this company. If they are all agree, that means you're not biased. But if they're against you, or they are not sharing another opinion, then you might really want to aware that you might be biased. Okay, so if you have done all this, and then you decided that this is where you should put your money in, then yeah, you can, instead of just focusing whether you're having loss aversions or not, you can jump out, move on, and strategize a plan to how you gonna recover these positions, or you want to just cut loss it, take the losses, and then move on to another stocks, another counter, another trading opportunities. Okay, yeah. So just accept that everyone have bad time, everyone have that moment that making bad trades. Okay, it's not about how many bad trades, or how bad our trade is, or what kind of state we are in. Okay, the motive, the reason why we're having this webinar today is to help the traders to aware that what's happening. Okay, and only when you acknowledge that this thing is happening to you, then only the trader able to move on and make a decision what he wants to do, whether to continue to hold it, whether to cut it, or whether to formulate a plan for it. Okay, that is the follow-up actions, the active actions are the one that is more important. Okay, that I hope throughout the sections it can help you guys to move on to that phase. All right. Okay. So if there's no any other questions, I see that I overshot by a little bit. Okay. If there's no any other questions, then we shall end our section here today. Okay. If you have if you have any sections, any questions, all these things, you can always feel free to WhatsApp us at this number. You can find me at this number as well. Okay, and if you're interested in open any account, stocks trading accounts, or know more about trading, honestly, you can feel free to contact us as well. All right. Okay. Thank you very much for your time today. Thank you for joining our sections, and we shall end our section here today. Thank you very much, and have a good night.